1. A bookkeeper mistakenly records a 45,000 takas credit purchase of inventory from Rahim Traders in the sales book. The trial balance will still agree perfectly. This type of error is classified as an Auction 1. Error of commission. Auction 2. Error of principal. Auction 3. Error of omission. Correct answer is error of commission. 2. The installation cost of 25,000 takas for a newly imported manufacturing machine was debited to the repairs and maintenance account. Rectifying this error prior to closing the financial statements will cause Auction 1. An increase in non-current assets and an increase in net profit. Auction 2. A decrease in non-current assets and a decrease in net profit. Auction 3. An increase in liabilities and a decrease in operating expenses. Correct answer is an increase in non-current assets and an increase in net profit. 3. A credit sale of 18,200 takas to Mr. Kareem was accurately recorded in the sales day book but posted to his ledger account as 12,800 takas. What is the correcting journal entry required to fix this ledger imbalance? Auction 1. Debit Kareem's AC 5,400 takas, credit suspense AC 5,400 takas. Auction 2. Debit suspense AC 5,400 takas, credit Kareem's AC 5,400 takas. Auction 3. Debit Kareem's AC 5,400 takas, credit sales AC 5,400. Correct answer is debit Kareem's AC 5,400 takas, credit suspense AC 5,400. 4. Before correcting errors, a firm's draft net profit stands at 350,000 takas. It is discovered that closing inventory was overstated by 40,000 takas, and year-end accrued electricity expenses of 15,000 takas were completely omitted. What is the corrected net profit? Auction 1. 295,000 takas. Auction 2. 375,000 takas. Auction 3. 325,000 takas. Correct answer is 295,000 takas. 5. An accountant discovers that the purchases day book for the month of October was undercast by 10,000 takas. If the trial balance has already been forced to agree using a suspense account, the correcting entry requires a Auction 1. Debit to purchases account and a credit to suspense account. Auction 2. Debit to suspense account and a credit to purchases account. Auction 3. Debit to purchases account and a credit to trade payables. Correct answer is debit to purchases account and a credit to suspense account. 6. Which of the following errors represents an error of principle that explicitly violates structural accounting frameworks? Auction 1. Debiting the construction cost of a factory extension wall to the wages account. Auction 2. Posting a cash receipt from a debtor into the personal account of a different customer. Auction 3. Completely skipping the recording of a credit purchase invoice from a foreign supplier. Correct answer is debiting the construction cost of a factory extension wall to the wages account. 7. Two independent errors are found, the sales book is undercast by 5,000 takas, and the rent expense ledger is undercast by 5,000 takas. Because these errors shield each other, the trial balance balances. These are: Auction 1. Compensating errors. Auction 2. Errors of omission. Auction 3. Errors of principle. Correct answer is compensating errors. 8. A cash payment of 12,500 takas to a trade supplier, M.S. Anise & Company, was correctly recorded in the cash book but posted to the credit side of their personal ledger account. This error will cause: Auction 1. The trial balance credit total to exceed the debit total by 25,000 takas. Auction 2. The trial balance debit total to exceed the credit total by 12,500 takas. Auction 3. The trial balance to remain balanced with no visible differences. Correct answer is the trial balance credit total to exceed the debit total by 25,000 takas. 9. If an error is discovered in a subsequent financial year after the books of accounts have been closed, the adjustment for nominal item errors must be routed through which account under CA guidelines? Auction 1. Profit and loss adjustment account or retained earnings directly. Auction 2. Suspense account of the current year. Auction 3. Trading account of the new year. Correct answer is profit and loss adjustment account or retained earnings directly. 10. A business received 30,000 takas from trade debtor Mr. Zaman. The accountant correctly debited the cash account but completely omitted posting the entry to Zaman's personal ledger account. To rectify this single-sided error: Auction 1. Credit Mr. Zaman's account with 30,000 takas and debit suspense account with 30,000 takas. Auction 2. Credit suspense account with 30,000 takas and debit Mr. Zaman's account with 30,000 takas. Auction 3. Debit cash account with 30,000 takas and credit sales with 30,000 takas. Correct answer is credit Mr. Zaman's account with 30,000 takas and debit suspense account with 30,000 takas. 11. If the credit total of a trial balance exceeds the debit total by 8,500 takas, the accountant opens a suspense account to make it temporarily agree. The initial opening balance of the suspense account is A. Auction 1. Debit balance of 8,500 takas. Auction 2. Credit balance of 8,500 takas. Auction 3. Nil balance until an entry is located. Correct answer is debit balance of 8,500 takas. 12. A firm paid 15,000 takas for the proprietor's personal medical bill from the business current account and debited the general office expenses account. The rectifying entry requires A. Auction 1. Debit to drawings account and a credit to general office expenses account. Auction 2. Debit to general office expenses account and a credit to drawings account. Auction 3. Debit to capital account and a credit to cash account. Correct answer is debit to drawings account and a credit to general office expenses account. 13. Goods costing 8,000 takas were returned by a credit customer, but the transaction was entirely forgotten and left unrecorded anywhere. This error is classified as an Auction 1. Error of complete omission. Auction 2. Error of partial omission. Option 3. Error of commission. Correct answer is error of complete omission. 14. A credit purchase of office furniture worth 60,000 takas from M.S. Otobi was entered into the purchases day book. Prior to any corrections, how does this affect the draft financial items? Option 1. Gross profit is understated, and non-current assets are understated. Option 2. Gross profit is overstated, and current liabilities are overstated. Option 3. Net profit is overstated, and current assets are understated. Correct answer is gross profit is understated, and non-current assets are understated. 15. A transaction for a check dishonor of 14,000 takas was posted to the debit side of the bank charges account instead of the debit side of the customer's personal account. To fix this through a journal entry. Option 1. Debit customer's personal account and credit bank charges account. Option 2. Debit bank charges account and credit customer's personal account. Option 3. Debit customer's personal account and credit suspense account. Correct answer is debit customer's personal account and credit bank charges account. 16. While auditing the books, it is found that a 10,000 takas discount allowed to a buyer was correctly recorded in the cash book but posted to the credit side of the discount received account. The required correction entry is Option 1. Debit discount allowed 10,000 takas, debit discount received 10,000 takas, credit suspense AC 20,000 takas. Option 2. Debit suspense AC 20,000 takas, credit discount allowed 10,000 takas, credit discount received 10,000 takas. Option 3. Debit discount allowed 20,000 takas, credit discount received 20,000 takas. Correct answer is debit discount allowed 10,000 takas, debit discount received 10,000 takas, credit suspense AC 20,000 takas. 17. A company discovers that year-end depreciation on office equipment of 18,000 takas was never recorded. Passing this delayed adjusting journal entry will impact the statement of financial position by Option 1. Decreasing the carrying value of assets and decreasing retained earnings. Option 2. Increasing current liabilities and decreasing gross profit. Option 3. Decreasing non-current assets and increasing current liabilities. Correct answer is decreasing the carrying value of assets and decreasing retained earnings. 18. A credit sale of goods for 50,000 takas to Apex Limited was passed through the purchases book. However, Apex Limited's personal account was correctly debited. This error will cause the trial balance to Option 1. Show a credit total that exceeds the debit total by 100,000 takas. Option 2. Show a debit total that exceeds the credit total by 100,000 takas. Option 3. Agree perfectly because the dual entry system was structurally maintained. Correct answer is show a debit total that exceeds the credit total by 100,000 takas. 19. If a suspense account was opened to balance the books, which of the following error corrections will completely bypass the suspense account? Option 1. An error of principle where a capital expenditure was recorded as a revenue expense. Option 2. A partial omission where a journal entry was not posted to the ledger asset side. Option 3. A casting error where the credit column of the cash book was totaled incorrectly. Correct answer is an error of principle where a capital expenditure was recorded as a revenue expense. 20. The collection of an old bad debt of 12,000 takas was credited directly to the customer's personal account instead of the bad debts recovered account. Rectifying this error will: Option 1. Increase reported net profit for the period. Option 2. Decrease the total value of trade receivables. Option 3. Have no impact on the net profit figure. Correct answer is increase reported net profit for the period. 21. A firm realizes that 5,000 takas of goods taken by the proprietor for personal use were completely omitted from the books. The correcting entry requires a: Option 1. Debit to drawings account 5,000 takas and a credit to purchases account 5,000 takas. Option 2. Debit to capital account 5,000 takas and a credit to sales account 5,000 takas. Option 3. Debit to purchases account 5,000 takas and a credit to drawings account 5,000 takas. Correct answer is debit to drawings account 5,000 takas and a credit to purchases account 5,000 takas. 22. The sales return book was overcast by 3,000 takas. If a suspense account is currently operational, what is the required correction entry? Option 1. Debit suspense account 3,000 takas, credit sales return account 3,000 takas. Option 2. Debit sales return account 3,000 takas, credit suspense account 3,000 takas. Option 3. Debit sales return account 3,000 takas, credit trade receivables 3,000 takas. Correct answer is debit suspense account 3,000 takas, credit sales return account 3,000 takas. 23. If an accountant changes the value of closing stock by discovering an unrecorded lot worth 20,000 takas, how does this correction affect the financial statements? Option 1. It decreases the cost of goods sold and increases gross profit. Option 2. It increases the cost of goods sold and decreases net profit. Option 3. It increases current liabilities and decreases retained earnings. Correct answer is it decreases the cost of goods sold and increases gross profit. 24. A credit sale of 7,300 takas to Mr. X was entered in the sales book as 3,700 takas and posted to his account as 3,700 takas. This error of commission requires which corrective journal entry? Option 1. Debit Mr. X's AC 3,600 takas, credit sales AC 3,600 takas. Option 2. Debit sales AC 3,600 takas, credit Mr. X's AC 3,600 takas. Option 3. Debit Mr. X's AC 3,600 takas, credit suspense AC 3,600. Correct answer is debit Mr. X's AC 3,600 takas, credit sales AC 3,600. 25. Which of the following errors is caught instantly during the preparation of financial statements because it keeps the trial balance from reconciling? Option 1. Posting only a single aspect of a journal entry into the master ledger. Option 2. Recording an invoice in the wrong subsidiary book with balanced debits and credits. Option 3. Expensing a non-current asset instantly on the date of acquisition. Correct answer is posting only a single aspect of a journal entry into the master ledger. 26. A company pays 90,000 takas as annual rent on October 1st. The financial year ends on December 31st. The entire amount was debited to rent expense, and no adjusting entry was made at year end. This means, Option 1. Expenses are overstated by 67,500 takas, and net profit is understated by 67,500 takas. Option 2. Expenses are understated by 22,500 takas, and assets are overstated by 22,500 takas. Option 3. Expenses are overstated by 90,000 takas, and liabilities are understated by 90,000 takas. Correct answer is expenses are overstated by 67,500 takas, and net profit is understated by 67,500 takas. 27. Under IAS 8 Accounting Policies, changes in accounting estimates and errors, material prior period errors must be corrected in the first set of financial statements authorized for issue after their discovery by Option 1. Retrospective restatement, adjusting the comparative figures of prior periods. Option 2. Prospective adjustment, correcting the figures in the current and future years only. Option 3. Writing off the entire error value directly within current year finance costs. Correct answer is retrospective restatement, adjusting the comparative figures of prior periods. 28. A credit purchase of goods for 15,000 takas from Nabil Traders was entered in the purchases book as 15,000 takas but posted to the debit side of Nabil Traders' personal account. The correcting entry requires Option 1. Credit Nabil Traders account with 30,000 takas and debit suspense account with 30,000 takas. Option 2. Credit Nabil Traders account with 15,000 takas and debit purchases account with 15,000 takas. Option 3. Debit suspense account with 15,000 takas and credit Nabil Traders account with 15,000 takas. Correct answer is credit Nabil Traders account with 30,000 takas and debit suspense account with 30,000 takas. 29. Rent received from a subtenant amounting to 24,000 takas was mistakenly credited to the interest income account. Correcting this error will change the net profit by Option 1. 0 takas, no change to net profit since both are operating income headers. Option 2. An increase of 24,000 takas. Option 3. A decrease of 48,000 takas. Correct answer is 0 takas, no change to net profit since both are operating income headers. 30. A bookkeeper extracts a ledger balance of 45,000 takas for trade receivables but accidentally writes it in the credit column of the trial balance. This error will cause Option 1. The credit total of the trial balance to exceed the debit total by 90,000 takas. Option 2. The credit total of the trial balance to exceed the debit total by 45,000 takas. Option 3. The debit total of the trial balance to exceed the credit total by 90,000 takas. Correct answer is the credit total of the trial balance to exceed the debit total by 90,000 takas. 31. Legal fees of 50,000 takas paid for acquiring a clear title to a newly purchased plot of land were debited to the legal expenses account. To correct this error, Option 1. Debit land account and credit legal expenses account. Option 2. Debit legal expenses account and credit land account. Option 3. Debit land account and credit suspense account. Correct answer is debit land account and credit legal expenses account. 32. A company's unadjusted suspense account shows a credit balance of 12,000 takas. It is discovered that a credit sale of 6,000 takas to Rana was omitted from being posted to his personal account. After fixing this, the suspense account balance will be: Option 1. A credit balance of 6,000 takas. Option 2. A credit balance of 18,000 takas. Option 3. Reduced to 0, nil. Correct answer is a credit balance of 6,000 takas. 33. A business entity paid 8,500 takas for insurance but recorded it in the journal as 5,800 takas. If this error is not corrected before the year end, what is the effect on the income statement? Option 1. Expenses are understated by 2,700 takas, and net profit is overstated by 2,700 takas. Option 2. Expenses are overstated by 2,700 takas, and net profit is understated by 2,700 takas. Option 3. Both expenses and net profit are reported accurately. Correct answer is expenses are understated by 2,700 takas, and net profit is overstated by 2,700 takas. 34. If a purchase return of 4,000 takas is correctly entered in the purchase returns book but posted to the debit side of the supplier's account as 400 takas, the trial balance discrepancy is: Option 1. 3,600 takas, which requires a suspense account track entry. Option 2. 4,400 takas, which requires an error of principal adjustment. Option 3. 0 takas, because the transaction remains mathematically balanced. Correct answer is 3,600 takas, which requires a suspense account track entry. 35. A second-hand delivery truck was bought for 300,000 takas. Repairs worth 40,000 takas were done immediately to make it usable, and this was debited to the motor vehicle's account. Is this an error? Option 1. No error was committed. Initial capital repairs must be capitalized under IAS 16. Option 2. Yes, it is an error of principle and must be shifted to the repairs account. Option 3. Yes, it is an error of omission that distorts current liabilities. Correct answer is no error was committed. Initial capital repairs must be capitalized under IAS 16. 36. An item of office equipment was sold for 15,000 takas cash. The bookkeeper credited this amount to the sales account. The rectifying entry requires a Option 1. Debit to sales account and a credit to office equipment account. Option 2. Debit to office equipment account and a credit to sales account. Option 3. Debit to cash account and a credit to suspense account. Correct answer is debit to sales account and a credit to office equipment account. 37. While reviewing a ledger, an auditor notices that a single credit entry of 9,000 takas was posted twice to the commission received account. To fix this through a journal entry. Option 1. Debit commission received account 9,000 takas and credit suspense account 9,000 takas. Option 2. Debit suspense account 9,000 takas and credit commission received account 9,000 takas. Option 3. Debit commission received account 18,000 takas and credit sales 18,000 takas. Correct answer is debit commission received account 9,000 takas and credit suspense account 9,000 takas. 38. A company discovers that goods sold on credit for 22,000 takas were completely omitted from the sales day book. Rectifying this error will directly change the current financial metrics by Option 1. Increasing current assets and increasing retained earnings. Option 2. Increasing current liabilities and decreasing gross profit. Option 3. Decreasing current assets and increasing net profit. Correct answer is increasing current assets and increasing retained earnings. 39. If an accountant posts a balanced entry to the wrong personal ledger account, e.g., debiting Mr. A instead of Mr. B, what will be the effect on the suspense account? Option 1. It will have no effect on the suspense account because the trial balance still balances. Option 2. It will create a debit balance in the suspense account equal to the transaction value. Option 3. It will double the opening balance of the active suspense account. Correct answer is it will have no effect on the suspense account because the trial balance still balances. 40. A business paid 50,000 takas for office wages. The bookkeeper debited the cash account and credited the wages account. What is the correcting journal entry to rectify this complete reversal? Option 1. Debit wages account 100,000 takas and credit cash account 100,000 takas. Option 2. Debit wages account 50,000 takas and credit cash account 50,000 takas. Option 3. Debit suspense account 100,000 takas and credit wages account 100,000 takas. Correct answer is debit wages account 100,000 takas and credit cash account 100,000 takas. 41. An unrecorded credit note of 6,500 takas received from a supplier for goods returned is discovered. To correct this in the books of accounts. Option 1. Debit trade payables 6,500 takas and credit purchase returns 6,500 takas. Option 2. Debit purchase returns 6,500 takas and credit trade payables 6,500 takas. Option 3. Debit trade payables 6,500 takas and credit suspense account 6,500 takas. Correct answer is debit trade payables 6,500 takas and credit purchase returns 6,500 takas. 42. An error of principle alters the integrity of financial statements because it mistakenly shifts values between which categories? Option 1. Capital expenditure items and revenue expenditure items. Option 2. One personal customer account and another personal customer account. Option 3. The cash column and the bank column of a subsidiary book. Correct answer is capital expenditure items and revenue expenditure items. 43. If a company overstates its opening inventory for the current financial year by 35,000 takas, what is the effect on the current year's draft net profit? Option 1. Net profit is understated by 35,000 takas. Option 2. Net profit is overstated by 35,000 takas. Option 3. Gross profit increases while net profit stays identical. Correct answer is net profit is understated by 35,000 takas. 44. A check of 19,500 takas received from a debtor was entered in the cash book but completely omitted from being posted to the ledger. If this is corrected using a suspense account, you must: Option 1. Credit the customer's personal account and debit the suspense account. Option 2. Debit the customer's personal account and credit the suspense account. Option 3. Debit the cash account and credit the customer's personal account. Correct answer is credit the customer's personal account and debit the suspense account. 45. A business bought a light fixture for the office room for 12,000 takas. It was entered in the purchases book and posted to the purchases account. The rectifying entry requires a debit to: Option 1. Office equipment or furniture and fixtures account and a credit to purchases account. Option 2. Purchases account and a credit to office equipment account. Option 3. Suspense account and a credit to cash account. Correct answer is office equipment or furniture and fixtures account and a credit to purchases account. 46. If a suspense account is closed with a zero balance after all mistakes are corrected, it proves that: Option 1. All errors that cause the trial balance to mismatch have been found and corrected. Option 2. The books of accounts are entirely free from errors of principle and omission. Option 3. The net profit calculation matches the corporate tax return perfectly. Correct answer is all errors that cause the trial balance to mismatch have been found and corrected. 47. A company discovers that a 1 million takas bank loan taken at year-end was recorded by debiting cash but crediting share capital. Correcting this error will shift structural components within: Option 1. The equity section to non-current liabilities on the face of the balance sheet. Option 2. Operating expenses to financial costs in the income statement. Option 3. Current assets to non-current assets on the face of the balance sheet. Correct answer is the equity section to non-current liabilities on the face of the balance sheet. 48. Bad debts written off amounting to 700,000 takas were posted to the ledger but completely left out when pulling numbers into the trial balance schedule. This error will cause: Option 1. The credit total of the trial balance to exceed the debit total by 700,000 takas. Option 2. the debit total of the trial balance to exceed the credit total by 700,000 takas. Option 3. No mismatch in the balancing totals of the trial balance schedule. Correct answer is the credit total of the trial balance to exceed the debit total by 700,000 takas. 49. When generating adjusting entries, an accountant miscalculates prepaid insurance by understating it by 6,000 takas. Correcting this mistake before publishing the financial statements will: Option 1. Increase current assets by 6,000 takas and increase net profit by 6,000 takas. Option 2. Decrease current assets by 6,000 takas and decrease net profit by 6,000 takas. Option 3. Increase current liabilities by 6,000 takas and decrease retained earnings. Correct answer is increase current assets by 6,000 takas and increase net profit by 6,000 takas. 50. According to professional accounting standards, if a suspense account balance cannot be resolved before the statutory financial statements are published, where is it presented? Option 1. In the statement of financial position, balance sheet under current assets, debit balance, or current liabilities, credit balance. Option 2. Written off automatically into the statement of profit or loss as an unclassified administrative expense. Option 3. As a direct reduction entry within the statement of changes in equity schedules. Correct answer is in the statement of financial position, balance sheet under current assets, debit balance, or current liabilities, credit balance. Quiz completed successfully.